Good afternoon, everyone. Welcome to the special business meeting for the District of Squamish for Tuesday, May 3rd. Hatsqualin, Queestalukmuk, Lasquamish, Okameo. We are meeting today on the traditional unceded territory of the Squamish Nation. Motion to adopt the agenda, moved by Councillor French, seconded by Councillor Herford. Any opposed? Motion carries. Just one item on the open agenda for this afternoon, and that's our 2021 audited financial statements, and I will turn it over to our staff.
Hello, Mayor and Council. My name is Rianne Sousa, and I'm the Director of Financial Operations at the District. And I'm joined here today by our auditors from BDO. Please welcome Paul Fripp, BDO Partner, Andrew Davies, BDO Senior Manager, and Terry Tran, BDO Senior Accountant. I'm here today to present on the District's 2021 audited financial statements. The goal today is that Council receive and accept the 2021 consolidated financial statements. On our agenda is I will be presenting the salient financial statement items, and then we'll turn it over to Council for questions and discussions to staff and BDO. For Council and the public's background, the Community Charter of BC states that the financial statements must be presented to Council for its acceptance and the financial statements sent to the municipal inspector by May 15th of each year. Further to this, the municipal auditor must report to Council on the audit review of the financial statements. Key elements to highlight are the municipal auditor's report is included in the financial statements. The auditors concluded that the consolidated financial statements present fairly in all material respects the financial position of the district at December 31st, 2021, in accordance with Canadian public sector accounting standards. Consolidated within the district's financial statements are the Squamish Public Library and the Squamish Sustainability Corporation. It's also to be noted the financial statements are within the approved financial plan. Prior to moving into the detailed review of the financial statements, I first want to note that the 2021 financial statements indicate that the district is in good financial health. The net assets of the district are $29.4 million, which is sufficient to meet the district's short and medium-term obligations. I'll now move into the significant variances on the statement of financial position in comparison to the 2020 actuals. The statement of financial position can be found on page 2 in the financial statements. First, cash and cash equivalents has increased by $17.5 million. The increase is primarily due to the expiration of a $10 million GIC, a $3.6 million community amenity contribution, a $1.3 million increase in servicing agreement deposits, and a $2.5 million of grant funds not yet spent. Conversely, investments have decreased by $7 million. The decrease is primarily due to the expiration of a $10 million GIC, which is netted by a $3 million MFA mortgage fund investment. Accounts payable has increased by $3.4 million. The increase is due to a $1.3 million payable to the Fire Hall Number 1, also referred to as Valley Cliff Fire Hall, contractor for their December invoice, and a $2 million payable for the finalized RCMP contract. Deferred revenue has increased by $3.4 million. The increase is due to grant funds for the Winnaick Seep Dike carrying forward, grant funds for the Adventure Center revitalization carrying forward, and an increase in DCC funding. Lastly, debt is increased by 7 million. The increase is primarily due to the issuance of short-term debt to fund Fire Hall number 1. Continuing on with the statement of financial position, tangible capital assets represent the cost of assets less accumulated amortization. There was a 14.9 million increase in tangible capital assets. The 360 million accumulated surplus balance represents a 289 million investment in tangible capital assets, a $64 million reserves and provisions balance, and a 6.9 million unallocated surplus balance. 6 million of the unallocated surplus is eligible to be transferred to the general operating reserve. The 6 million is net of 2.9 million of unallocated surplus that is temporarily bridge financing projects that will be funded by debt. I'll now move into the significant variances in comparison to the financial plan on the statement of operations, which is page 3 in the financial statements. Utility user fees revenue is 1.6 million greater than the financial plan due to 2 reasons. One, the financial plan is estimated based on the 2020 users. And 2, the landfill tipping fees were 500,000 greater than the financial plan, which is offset by an increase in solid waste management expenses. Grants eligible to be recognized as revenue is greater than what was estimated in the financial plan due to a Community Works Fund grant, a transfer from the provincial government for traffic fines, a flow-through grant to Squamish Helping Hands, a grant from the provincial government for pre-design seismic assessment, and grants received by the library. Investment revenue received was 800,000 greater than what was estimated in the financial plan, as the actuarial valuation on MFA loans was not budgeted. Continuing on to the expenses on the consolidated statement of operations. General government expenses are 2 million greater than the financial plan due to actual amortization being greater than what was budgeted. Transportation and transit expenses are 420,000 less than the financial plan due to less than anticipated road maintenance. Solid waste management expenses are 570,000 greater than the financial plan, primarily due to an increase in waste diversion expenses, which is offset by an increase in utility user fees. Continuing on to other income on the consolidated statement of operations. Government transfers for capital revenue is 6.9 million less than the financial plan, which is primarily due to unexpected delays in the Waianae Sea Park Dike project and the Jimmy Judd Slough rewatering project. In addition, the Valley Cliff Child Care Facility grant was not awarded until 2022. Developer cost charge capital revenues is 4.6 million less than the financial plan due to the unexpected delays in the Pioneer Way Extension project, the Mamquam Road Parks Trail project, the wastewater treatment plant future growth project, and the Garibaldi Tantalus intersection upgrade project. Developer contributed assets are 7.4 million greater than the financial plan, as the revenue is not estimated in the financial plan. Lastly, you'll note that the district has budgeted and realized a surplus of 12.2 million. The rationale behind the surplus is the legislated calculation for a balanced budget in the financial plan is calculated differently than the annual surplus in the financial statements. The financial plan recognizes sources and uses of funding that's not recognized in the consolidated statement of operations, including capital expenditures, borrowing proceeds, principal repayment on debt, and various transfers to and from reserves and provisions. The financial plan also eliminates amortization on capital assets. Oops. The recommended resolution is that the District of Squamish Council receive and accept the 2021 consolidated financial statements as presented by the Financial Services on May 3rd, 2022. I will now turn it over to council for discussion and questions.
Thank you very much. Council, questions on our financial statements? Councilor Pettingill.
Yeah, one on page 6, other fees and charges. It explains why the 2021 revenue is higher than the financial plan. But as I look at the numbers, it looks like we're actually lower than the financial plan. I'm just wondering if that's a typo there.
Through the chair, are you looking at page 6 in the report?
Sorry, page 6 in the council agenda, which is not sure. Oh, not sure what page it is in.
Oh, that's yeah.
Yeah. Oh yeah, first page of the report, I guess.
It's in charges. And you're looking at other fees and charges?
Yeah.
Fees and charges. Yes, I apologize. That is a mistake. It should be less than.
Okay, thank you. And then I'm just wondering if I still find myself confused around amortization of tangible capital assets. And I was thinking this is over time, buildings and assets lose their value. And so this is the lost value each year effectively. Is that correct?
Through the chair, yes, its amortization reflects the use of the asset each year.
Okay, thanks. And then my final question, and maybe this is one maybe more for the auditor, but I understand that taking debt from MFA gives us some protection against inflation, but overall, we've got our investments on one side which benefit from inflation, on the other side, other things which, rising costs. Are we do we have a good balance there? Or is there any sort of risk there? I didn't see any risk identified, but I'm just sort of wondering if you can give sort of any assessment of how much of a buffer or protection we have. Like, are we sort of balanced on either side?
Through the chair, in terms of balanced, we're not necessarily looking at a debt to equity per se ratio. The investment is based on cash flow analysis and what is required to maintain operations and for cash outflow for capital investment. We're taking on debt as we are required in terms of the capital investment as well and as necessary. So it's not necessarily about the balance per se. It's about what is required ahead of us in the financial plan.
Councilor Race and then Councilor Stone.
Thank you. I was curious, again, on probably the same page. The first item is the variance because of the risk to roll. And I was just curious, and that it was about $500,000. And so there's a couple of questions around that. And one, is that due to the Quest University reclassification? Is that number larger than usual, or is there a relatively constant amount of variation due to the appeal process? And I assume then it's funded by the operating reserve, or will be funded by surpluses of some kind?
Through the chair, thank you for that question. So to answer the first part of the question, the Quest liability for risk to roll is unusual. We don't typically see that sort of value. We do see ebbs and flows absolutely every year. And then it just gets absorbed against the annual surplus, which in effect then would impact the general operating reserve as we've now established it. So what we are proposing in the new general operating reserve policy, which we had last week at the Committee of the Whole and discussed last week, there will be an allotment within the general operating reserve for those specific reasons when we have fluctuations in our risk to roll, and that's exactly how it will be funded.
And if it was a constant or a relatively constant number, albeit smaller, would we ever consider in the budget process sort of providing a contingency for revenue? So we would sort of almost just tax in anticipation of some issue like that, and then if not used, it would just flow into surplus.
Through the chair, that's in effect what we're doing through allotting it in the general operating reserve, is that we're providing contingency. Now, if it went over and above that, certainly we would have to go back to taxation to absorb that increase. But effectively, that is what we're proposing in the general operating reserve, is setting those funds aside in effect in case of a larger risk to roll.
Councillor Stoner?
Thank you. Through the chair, a quick question on the investment piece. Noted a decrease of about 7 million in investments, and you mentioned that was in part due to a 10-year GIC that came term. But then netted only 3 million was reinvested with MFA, so I'm just curious where the remainder went.
Through the chair, the remainders in cash and cash equivalents, the line above in the financial statements.
Great, thank you. And then I guess maybe picking up on where Councillor Pettingill was going, in terms of our investments, are we reconsidering at all where we are holding cash and cash equivalents in our investments due to the risk of inflation and potential impacts on interest rates?
Through the chair, yes. In short, we are, in terms of looking at investments, in terms of what makes sense in regards to, through a cash flow analysis, what we can invest versus what we need to keep for working capital.
Happy to hear that you have that covered. I don't need more detail than that. And then one other question about sorry, let me just pick up my notes here. The retirement asset obligations, and I'm just picking up on this from, I think, some of the statistics that came out earlier this week from the census data in terms of aging workforce. And I'm just wondering if we at all are changing the way that we assess the retirement risk plan, given the aging workforce and potential contraction of the younger demographic coming in. That might be an auditor question.
Through the chair, where that's reflected on the financial statements is on the statement of financial position. You'll see there's a provision for post-employment benefits. And we have an actuarial evaluation. They do a full reevaluation every 3 years. And then each year in between that, it's forecasted. So yes, that is taken into account.
So in moving to the general reserve, what will our financial statements show next year? Because we have accumulated surplus. Will that line still be there, but then there'll be a general reserve line? So how do these transition now that we have this fund?
Through you, Mayor. So the general reserve will just be just like any other reserve. So it will be part of the reserve listing. So you'll still see the accumulated surplus. It just has, like, as you can see it now, it has sections within it, which is in note 12, I believe, of the financial statements that will just show that allotment, what's in unappropriated, what's in allocated, and what's in legislated. So it'll be part of that legislated.
And then when we look at the general government expenses, that first line, it says expenses are greater than the financial plan due to amortization. And can you just explain why there's a $2 million difference from what we budgeted and what it actually arrived at?
Through you, Mayor, it was an estimate at the time of budgeting. So the estimate was just $2 million lower than the actual amortization once it was calculated at year end.
And is there a way to refine those estimates every year, or what? I mean, it's a pretty big number. Many of our other estimates are quite close, and so this one just seemed quite high.
Through the Mayor, our financial analyst who does our budgeting has taken that into account, and it is a closer estimate for 2022, and it will be going forwards.
All right. Any other questions? So the motion for council to consider is that the district receive and accept the 2021 consolidated financial statements as presented by Financial Services on May 3rd. Moved by Councillor French, seconded by Councillor Race. No, I already asked for questions. Go ahead, Councillor.
Sorry, Councillor Pettingill caught a misprint in it, and I just wanted to make sure that was accounted for in the motion that we're considering.
The misprint was in the schedule, not part of the financial statements. So I think we're okay. Any comments? Call the question. Any opposed? Motion carries. Thank you. We're now going to recess for a few minutes just to get to our closed meeting, but I'll take the motion to close now. Moved by Councillor Herford, seconded by Councillor Stoner. Any opposed? Motion carries. And we'll reconvene. We're quite ahead of schedule. That's okay. Okay, 15 minutes from now.